Hello, this is the final exam review for Chapter 19. So I'm going to run through the summary sheet real quick and then go through the review problem. First of all, you should know the structure of a cost, volume, profit, income statement. And of course, part of that is knowing how to compute the contribution margin based on sales minus variable costs. So you should know how to compute the weighted average contribution margin rate per unit and weighted average contribution margin ratio based on sales mix, which was learned about later on in the chapter, and the contribution margin information for each product or service line, or based on a unit of limited resource. You should know how to use the weighted average contribution margin to compute break-even points, both in dollars and in units, and then be able to apply the total break-even amount to the various products in the sales mix. You should know what operating leverage is and how to interpret what it means when it's either high or low regarding the volatility of income. And you should know what the margin of safety is and how to compute it. So now let's discuss this review problem, which is the comprehensive do-it problem for Manzek bicycles, found on page 997 of the book. So this problem combines sales mix, the weighted average contribution margin, and some break-even analysis. So let's take a look. I mean, all this is of course presented in the book, but just to kind of run through with a little verbiage what's going on here. So the first thing they wanted you to do in part A was to compute the sales mix percentages. So what you need to do is look at each product, and there are 3 of them in this case, and the amount of units projected to be sold for each one as a percentage of the total. So we know that from what they told us that there are going to be a total of 40,000 units sold. The Pro product, the Pro bicycle, is projected to sell 5,000, which is only about 12.5% of that total, based on 5 divided by 40. The intermediate bike is projected to sell 10,000, so that would be 25%, 10 divided by 40. And finally, the standard bike is apparently the most popular. They're projecting to sell 25,000 of those, so its percentage of the sales mix would be 25 over 40, or 62.5%. And your check on that work is to make sure that all 3 of those percentages total, of course, to 100%. Then we go to part B, where they wanted you to compute the weighted average contribution margin per unit. So what we need to do is work with those percentages, and then for each product multiply their percentage of the sales mix times the difference between their selling price and their variable cost, or their unit contribution margin. And we got that information up above, which shows that for the Pro, we're looking at a selling price of $800 per unit, variable cost of $500, and we multiply that difference, 800 minus 500, which is the contribution margin, times the 12.5% share, or 0.125, I'm sorry. Then we add the intermediate, which is 25%, or 0.25, times the difference between selling price and variable cost for that one, which is 500 minus 300 per unit, or $200 contribution margin. And finally, we add the contribution margin weighting of the standard bike, which is based on its share of sales, 0.625 or 62.5%, times the difference between its selling price, $350, and its variable cost of $250. And when we do all that math, we end up with a contribution margin total weighted average of $150 per unit. Now, how can we use this? Well, we can use this to come up in part C with our break-even point in units, because remember that when we do the break-even point in units, we're dividing the total fixed cost by the contribution margin per unit. So when you divide dollars per unit into dollars, you're going to get units as a result. So when we do that division, 7,500,000 divided by $150 per unit, we get 50,000 units as our break-even point. But that really doesn't mean a lot until we determine how much of that 50,000 we should plan to sell for each product line in order to break even. And to determine that in part D, we need to go back to our sales mix percentages. So of that 50,000 units that we need to sell in total to break even, the Pro will comprise 6,250 of that based on 50,000 times its share, which was 12.5 or 0.125. Intermediate is 50,000 times 0.25 or 25%, and that gives us 12,500 of those units. And finally, the standard is 50,000 times 62.5% or 0.625 equals 31,250. And again, the check on your work there is to add those three figures together: 6,250, 12,500, 31,250. You should get your 50,000 units of break even. So that's a quick run through of that problem. Be back with the problems for chapter 20.